Okay. So, yes. So I'm just calling this simply trading for beginners, some basic concepts about trading, some very basic concepts. First of all, what is trading? All right. So this is very important because you get into something you don't know what it is. There's a lot of misunderstanding about trading. Some people say that it's gambling, and a lot of misunderstanding is there. Let me tell you what it is. I'll begin with the idea of shareholding because you might have heard the word share market. Okay, you might have heard the word share market. So, shareholding is simply the idea that you are part owner of a business. Okay, sometimes you might be buying a stock that's worth 50 rupees or 20 rupees or 100 rupees. Still, you actually are becoming a part owner of the business. So it's almost like if you were to start a small tea shop and the cost would be maybe, I don't know, 5,000 rupees or something like that, or 10,000 rupees. And you don't have all the money to begin. So let's say that you start and but you don't have enough money. So I also come with you and I say, okay, I will partner with you. Okay. And we'll both put money into it. So you put 5,000, I put 5,000. Or we can have how many people we have? One, two, three, four, five, six, 7 people. Like that, you can divide that up into the number of people, and each person can give a share of the capital, a share of what it costs to start the business. Okay. So if it's just 2 people, so I put in 5,000 and you put in 5,000. That's it. And so we start the tea shop. All right. And then basically, after a whole month or whatever time we determine, we take the money that came in, we reduce all of the expenses like products that we have to buy and any other expenses that we have, we take out the expenses. And after all the expenses, the money that's left over is for both of us. You take half and I take half. But if we are planning to start a few more tea shops, then the difference is that we may not take as much of the profit. See, part of the profit we will put aside for future investment. So if the profit is a certain amount and we want to divide it, we will take out some portion of the profit for ourselves, for starting new businesses. Okay. And then the balance is what we use. Now, how does the value of a stock go up? Now, this is a big question. This is where when people say that this is gambling and all of that, this is where I disagree. How does the value of the stock or the share increase? Okay, let's say, for example, we both are part owners in a tea shop. We both have part owners. I put in 5,000 and then you put in 5,000. And then we both work very hard and make it very successful. We have lots of customers. Now, along with tea, we start giving bonda, vada, and all these other things we start giving, and we increase the sales in that one tea shop. After a few months, we save up enough money to buy to start a new tea shop in another place, okay, at a second location. And then all of a sudden we have, so we're not taking as much money for ourselves, but we're putting it back into the business. Now we have started 2 tea shops. So let's say that we started one tea shop and we were making about maybe 10,000 rupees each month. Okay. All of a sudden, we started adding new products. Okay. And then maybe the sale increased to 15,000, 18,000, 20,000. Then we started a new branch. Okay. A new branch. And all of a sudden, the value increases to maybe, double that or more. Okay. By the way, keep in mind, the more branches that you have, the money just does not double. It actually goes greater than double. Okay. There's a certain value in that. Okay. So it's just because of the popularity of the business increasing. So like that, we have started 2 or 3 or 4 different locations, and we're making very good money every month. And what do we do with the profits? You and I we split the profits, 50% for you and 50% for me. And then at that moment, a third person comes and says, look, I would like to get into this. And can I, buy a share in what you guys are doing? And we say, okay, all right, you can buy a share. All right. Now, how much should that share be? See, at the beginning, what was the share cost? I put in 5,000 and you put in 5,000. So the cost was 5,000 per share at that time. Now, a third person comes and says, look, I also would like to take part in this business. All right. And so we said, well, you need to put in your share. What will that be? Can it be 5,000? Of course not. Why not? Because we developed a concept that wasn't there. We were not doing it from scratch. We began this business. We bought the products. We worked hard. We built a reputation in the community, developed customers, and then we added 2, 3, 4 different locations. And then the sales increased, and we have hired some staff. We did a lot of work, and we went through a lot of effort. And then our profits are increasing every month. And so at that point, we will say, look, I don't think we can give you this a share at the same value that we got into it. Why not? Well, because the business has increased, the value of the business in revenue, okay, the value of the business has increased. Not only revenue, let me say one more thing, not only revenue, but another value of the business is we have 3 or 4 locations in this same community or in various communities, and we have built up a good reputation. So when people think of tea or coffee or whatever, they think of our business, okay? So all of a sudden, now the value is no longer 5,000, it has increased. Maybe we might ask for 7,000, 8,000, or 9,000, something like that. The value of what we put in, or maybe if we have started several branches, we might say, no, we feel that it's worth 15,000, okay? And of course, the buyer might come and try to bargain, and maybe we might end up maybe at 14,000 or 14,500 or something like that, okay? And then so every new person that wants to buy, all right, that increases. Now, another thing, let's say that I want to sell my share. Same thing happens, okay? Although I gave only 5,000, now the value has gone up. Other shareholders have come in, and the value has gone to 14,500. And then, so at this point, I might say, look, I want to sell, but the last one we sold was 14,500, and and we have built the business even better now. I think we should charge like 16,000 or something like that. So the value of the business increases. That's why I say this is not gambling. Okay, this is actually investment into a business. And then I already talked about profit sharing and then selling your shares. Okay, now any of you, if you have doubts or questions, please write it down. I'll be sharing a few more things and then I'll come back to this. Okay, please write down any questions you have about trading. Next one is the actual account opening for Zerodha. Now, I put the question there, why Zerodha? Actually, you don't have to use Zerodha. There are many different trading platforms available. But, in India, I've already used about 9 or 10 different trading platforms in India. I've tried all different ones. And I really feel that this is one of the best ones that are out there. Okay, and in the US also, I trade in the US also, but there also I've used several ones. But this one I find to be the very best so far in its ease of use and in many ways. Okay, so how do you start an account? I had given you my link. I can share my link again with you before we close. Now, why use my link? Well, any link that you use, it will cost you the same. The account opening, I believe, is 200 rupees. And I don't charge anyone for teaching them, for guiding them. I don't charge anything extra for the videos that I do, and for even on the group, I get in and answer questions. I help people, and it literally takes a lot of time. I don't I don't I don't sell my services in that sense. Okay, I don't charge for that, and but when you open your Zerodha account through my link, I get a very small percentage uh, of the brokerage fee that you pay. The brokerage fee is actually very small, to be honest with you. From January onwards, I think the amount of money that I've received was maybe 150 rupees, 140, I think. That's about it, So this is not something that you're making big money on, but it does pay something, but they pay it. So it is no cost to you. So what does it take to open a Zerodha account? Of course, you need to have your PAN, Aadhaar, bank account, phone number. Make sure these are properly connected. Okay. And if you have these things in order, make sure your name is correct and all of that. If you have these things in order, you should be able to do this properly without any difficulty. Okay. And remember, there is a 7-step account opening process. It's not really a big deal. It can be done even on the phone. And it should not be a problem. If you have difficulty while you're trying to open, you can let me know and I can see what I can do. All right, next. After you have opened your account, the next step you want to take is to create a watch list. What is a watch list? It's simply a list of stocks you are regularly watching. Okay, you're regularly watching it. What are you watching it for? You're watching for the price movements. I'll talk more about that later. You're watching the price movements. Okay. Now, watching the price movements, you want to narrow down your list with stocks that have a higher probability to go up in value. See, we cannot predict the future. There is no way to predict the future. But what we do is we look for stocks that have a higher probability to go up in value. Now, how do you know that? Well, these are the things that we are teaching. These are the things that we are learning and practicing. Okay. Now, how to select the stock? First of all, you narrow down your watch list. How do you do that? How do you narrow down your watch list? Well, your watch list could have maybe 30, 40, or 50 stocks, or many more. Okay, thousands are being traded on the stock market. So you can have a lot of stocks in your watch list. But if you look at many stocks, you will simply get confused. So there are a few things that we use to help us to determine which of these is a better selection, which of these stocks have a higher probability of the price going up. Okay, that's what we are looking for. The stocks that have a higher probability of the price going up. How can we do that? Well, there are several things I've listed there: moving average, crossover, support and resistance, candlestick patterns, trend lines, triangle patterns. So that's 1, 2, 3, 4, 5 items there. So each of these things I have included, for each of these things, I've included some videos that I have done, okay, on how to do this. Now, in our monthly class, and we'll do another one last Thursday of September, in our monthly class, we go through each of these, and we might do some of these again. Most probably in September, I will be doing something called triangle patterns and trend lines, or maybe both or just one. Okay. Last month, we did candlestick patterns. So these are ways to analyze and see which of the stocks have a higher probability of going up in value or going down in value. All right. So you can watch, you can take, maybe you can do a screenshot, and you can take each of these and you can watch the videos that I have in my Learning to Trade file. Okay, if you have not received that file yet, then I can give you a link for that file as well. It's like a whole entire tutorial on learning to trade. All right, now after you buy, what do you do? All right, what do you do after you buy? Here are several things. Number one, you can enter the trade, or you can make the purchase just for the day and take a small profit. Okay, some people do this. and they're only taking a profit of maybe 0.3% or 0.5%. And then once you get that 0.3%, you exit the trade, you sell. Okay, so you buy and you look for a small profit, maybe 0.5%. That's enough. And then you get out. Okay, some people do that every single day. All right. Now, if you do that every single day of the entire month, well, there's about 20 trading days in the month. Okay. Literally, if you do that for 20 days straight and you get 5%, then at the end of the month, you will end up with a 10% profit. Okay, let's say you're not profitable, you're not able to do that every single time, and you only make 5% profit. Still, that's worth it. Okay, that's one way some people make money. They enter and they take a small profit and they get out. Now, which ones to enter? All right, now see, those are some of the indicators that we are learning. That's also important because you want to enter a stock that is about to go up. Okay, you want to enter one that is about to go up. Number two, set a target for yourself of a certain percentage. It may be 5 or 10% or even up to 20% to get that goal, and just buy that stock, stay with it until it gets to that percentage, and then you sell. Okay, you can actually set up Zerodha's Kite. Kite is the name of the trading platform. You can set up Zerodha to where it will sell it automatically. So once it reaches 5% or 10%, it will sell automatically, and you will not have to do anything else in addition to that. Okay, it will automatically sell for you. So that's a good way to do that. Now, how long will it take? Well, there are some stocks that would go up 5% in one day, but sometimes you may end up waiting a week or two or a month. You never know. You never know what to expect. Okay. And the third option is to divide your capital into 5 or 10 portions. Now, that depends on how much capital you have invested. Okay. And then enter into that many trades. And when you do that, remember, you enter into trades that have the highest probability. And we have the indicators to do that. Okay. Then at the end of the month, sell 1 or 2 with the highest percentage profit. Okay. That's another way some people will do. They'll just leave it there for the whole month. And at the end of the month, they come back and they look and they'll see which one has the highest profit, sell that, and they take the profit. And the next day, whatever money you got out of that, you invest into another good high probability trade. Okay. Number 4, you can ride the entire trend and take a higher profit, but that may take several months. I know some people have done this. They will leave it for several months, up to 6 months, okay, and expecting to get maybe 20, 30, 40%, 50% like that. They'll wait that long. And there are some indicators that tell us if the trend is still moving up or if the trend has gone down. Okay, if the trend has gone down, there's no more reason to stay in the trend, in the trade, you get out. And then number 5, ride the trend, but use a trailing stop loss of minus 2%, or for safety, you can take minus 5% for longer term trading. That means you put a stop loss. A stop loss is an order to sell when the price goes down a certain percentage. Let me repeat that. A stop loss is an order that you are putting, like a pre-order, a preset order to sell, okay, as soon as the price goes down a certain percentage. All right, these are 5 ideas. There are many more, but these are just a few ideas that I'm sharing with you. Okay, all right, what do we have after this? Let's see. Oh my, I think I've lost the... It says my sharing is paused. How did that pause? Let's see. Quote for today. That I wasn't ready for that yet. All right, what to do after buying. Okay, I think this is the last slide that I have for you, and then we'll look at some charts. Okay, Now, here's a quote that I haven't put it in the group yet. I'll put it maybe tomorrow or something. Peter Lynch, and he's a great investor and trader. He said, in this business, if you're good, that means you are right 6 out of 10 times. You're never going to be right 9 out of 10 times. What does that mean? That means that the best traders are never right all the time. They make losses too. So focus on getting more trades right than wrong, and you'll be considered a successful trader. Focus on getting more trades right than wrong, and you'll be considered a successful trader. Okay, so I'm going to stop the screen share. And all right, there was a few more people, but I think some of them, they lost their connection. So these are some of the things that I'm sharing right now that are some of the basics about trading, what it is, and what you do to get into the trade. All right. So now I want to give you an opportunity to ask questions. And once that opportunity is given, while you're asking questions, I will just get that link that I promised you. Yeah. Go ahead. Any questions? I asked you to write down questions if you have, and then we can talk.
Yes, sir. Can you hear me?
Yes.
Okay. So regarding stop loss, I'm not able to put the stop loss because mostly when I think this is the stop loss, but that the it goes down, it crosses the stop loss, but it hits the target later. I just check like that, and
Yeah.
it goes like that. So I'm not sure. How to put this stop loss, because sometimes it really goes down and hits the target, comes up and hits the target. But the people say that stop loss is compulsory for a disciplined trading. So how does that work actually?
Okay. See, for trading, stop loss is necessary because trading and investing is different. By the way, in the chat box, I've put a link to a file called Learn to Trade. So if you copy that link and somewhere, that file is like a training file that I've created. And almost every week I update it. I make some corrections, I add some things to it. And this is something almost every week. So please copy that. I believe it will be a very valuable tool for you to learn to trade. All right, so let's go back to stop loss. Now, why is stop loss important? See, trading and investing is different. With investing, you are going in for the long term. You are leaving the money in there for a very long time. Maybe you might leave it for years. Okay, that's investing. But trading, you're only going in either for that day or a few weeks or a few days. That's all. The purpose of trading is to earn an income. The purpose of investment is to develop a long-term capital. Okay, so the purpose of trading is to earn an income. So since you want to earn an income, if you enter a trade, that means if you purchase a stock and the price goes down, and actually the price will come up, but it could take a few weeks or a few months. So the question is this: how long will you be waiting for the price to come back up before you sell it? It could take months. And if you're trying to earn an income, then waiting months is not an option. That will not work for you. Okay. So what we do is we place a stop loss to reduce our risk. Our risk factor is reduced with a stop loss. Okay. So I'm going to share with you a couple of ways of setting a stop loss. Now, and this is something that I haven't gotten to teach with the group yet. Maybe next month or in the coming months, I will teach that. I'm just doing little by little each month. Savita has been with us for a long time as well, but this is something I haven't taught yet. So what we'll do is, let me open up some charts to give you some idea on this. 1 minute. Yeah. So I'm going to share with you something called Trading View. And Trading View is a nice charting software. It's a software that gives you charts, and I'll give you a link for that. Uh, and and there's a way to get like a full month of Trading View charts for free. Now you can do it without this. You can do it in any way, but you'll be able to set up different watch lists and all of that. That's the benefit of using this link. Okay, now let me share the screen with you. And here is Trading View. All right, tradingview.com. And I'm going to go to where it says trade, not trade, I'm sorry. It was supposed to be charts. Here it is, charts. Yeah. Okay, I hope this screen is visible to you. It's just opening up right now. It'll just see a white screen right now, but it will clear up. All right. Here is my watch list on the right. Okay, this is my watch list. So, like for example, this is HCL Tech. All right, and here is ITC. So, what I'm going to do is I'm going to show you how I would set a stop loss. See, this is what is called the daily chart. Okay, now what I do for a stop loss is this. Let me get rid of these lines. Yeah. Okay. If you look carefully at this stock, these are the prices. Okay, so the price at this bottom is about 199 rupees and 65 paisa. And here at the top, you notice this several times, the price goes up. Let me see if I can open up my 1 minute, please. I had a pointer and I don't see that anymore. A pointer that was very visible. Here it is. Yes. Okay. Yes. Okay. I hope you can see my pointer better now. Is it okay? All right. So you see this, the price gone down and it went up to this level, came back down to a similar level, came back up, and it's coming down. You see that? Several times this has happened. So this is called a particular range market, or we can say the price is going sideways. We would expect, or we would like to see the price going up like this. But what's happening is it went up a little bit, back down, up and down. All right. So how would you set the stop loss? Well, on the left here, here's a tool. Okay. And you can use what is called a long position. Okay. Long position. You can select that. And then you can select the bottom point of where this is trading. See this bottom point? All right. And then you can move this target up, like right up here. See this? All right. And you can look at how far low the price has gone down. Look at that. In other words, I'm going to set it like about maybe 2.5%, or maybe even up to 3%. Watch this. All right, 285, 298. Okay, so that's about 3%. Now, if you look carefully at this, okay, what I want you to notice is, see the price was up here and it went down. So what I would want to do is, there are two ways to handle this. Some people, what they will do is, they will enter in the trade right down here, where it's 199 or 200, okay? And they would put the stop loss at about 3%, which would be about 195.65. So that 195.65. So the cost of purchase would be 200, and they would put a stop loss of about 3%, like this. And then they would aim for a target of about See this? 7%. See? So whenever you put a stop loss of 3%, you want to aim for double that or more. All right? So double 3% would be 6%. You want to earn at least 6% if you're risking 3%. Now look at this. If the price goes down, all right, wherever you buy this, if you set the stop loss here, you're safe. It won't get sold out. All right. So this is one way that you can set the stop loss. Another way that people enter the trade is to wait for this to break out of this particular range. We call this support, the resistance and support on the bottom. Okay. So to answer your question, some people, they enter the trade and they just set maybe minus 2% stop loss or something like that, or minus 5%. Actually, another clearer way is to open the chart and look at where you have entered, all right, and see which have been the more recent low prices, and you can put the stop loss like that. So it is good to put the stop loss. Otherwise, what happens is the price may go down much further and you're not able to sell it and you're holding it for long term. But if you put a 2% or 3% stop loss and you lose that money, still it is fine because, like we said earlier, if you, out of 10 trades, if you had 6 right and 4 wrong, you are still profitable. How come? Because when you're risking 2%, you should be earning 4%. When you're risking 3%, you should be earning 6% or more. Okay, so by doing that, you can decide, you can put a wider stop loss if you need to. All right, I hope that helps. All right. Other questions that you wrote down while we were going through the slides? Binoy, is this understandable to you? Does this make sense?
Yes, sir. Sir, I'll get the video which you are recording. Maybe I'll watch some. Maybe because of the internet connectivity, I was not able to follow it.
Okay. So tell me which part that you would, anything you'd like me to repeat?
Sir, after that opening Zerodha account, so you were talking about next what? I didn't follow that one.
The next step is to create a watch list. A watch list is simply a list of stocks. A list of stocks that you are watching on a regular basis. Okay, so like I may have 30 or 40 stocks as a list. Now, by the way, in my file, Learning to Trade, I hope you copy that link. In there, I have given a link to a watch list that I'm suggesting, a watch list of stocks that are below 200 rupees, especially when you're starting out. You know, you may not be putting in a lot of money. Oh, by the way, when you're just learning to trade, after you open your Zerodha account, okay, put in a small amount of money to trade with and do not increase the money. Let's say, for example, if you can put in 5,000 rupees, or if you don't have 5 to spare, you can start with 2,000 or even 1,000. But what you do is don't add any more money. Give yourself 3 to 6 months to learn this process, and maybe another 3 to 6 months to get practice in doing this. Okay, now you might be thinking, wait a minute, that's like almost 1 year. Yes, it is. Okay, now to learn these processes, it's not really a lot. It's not really that hard, but it's just a matter of fine-tuning your ability to handle this. That's really what it is. Okay, so it's not an issue of how hard it is to learn. It's really not that hard, but it's just a matter of getting used to doing each of the things, the processes that's going on. Okay, so after you open your Zerona account, create a watch list. After you create a watch list, put in some money and don't add any more money for 3 to 6 months until you get to a point that every month you are profitable. Okay, now how much profit do you want to make? Well, that's up to you. But let me tell you something. If you put your money in the bank as an FD, fixed deposit, how much do you get? Well, you used to get 6%. I think now it's down to 5% per year. Okay, 5% per year. All right. And so that means each month you get less than 0.5% each month. That's all you get. Now here, if you make even 1% each month, let's say that's not very difficult to do, by the way. Even if you make 1% each month, that is 12% for the whole year. You are more than doubling what the bank will give you. Okay, even if by making 1%, which you can easily do. But if you make 2%, you're making more than that. Now, if you're making 5% a month, that's more than 60% in the year, right? Now, if you don't take out the profit, the benefit of the compounding, you'll end up with more than 90% of the year. Okay, so after opening your account, create a watch list, put in a certain amount of money, don't add any more money until like 3 to 6 months, until you see that you are profitable on a regular basis. Now, when you get to that point, you can put in, a sum of money each month. Don't put in, like, let's say you have access to lots of money, don't put in a lot of money. Every month, you put in a certain amount. Maybe it's 1,000 every month, or 2,000 every month, or 5,000, whatever it is. You put in a certain amount every month, month by month. Don't put in, like if you have 5 lakhs available to trade, don't put it all in there. Don't do it, okay? Just on a regular basis, add money step by step. Because as you add little by little, you learn how to handle the capital, how to divide the capital between your trades and how you make those decisions. So that's a step-by-step process. Okay, good. Any other questions?
Yes, sir. I have a question.
Yes, Jaro.
So if I want to hold some shares for 1 month, learning about the last 1 month will help. If I do this technical analysis and the learning about the last month, can I somehow predict? I don't know if I should use that word, but can I know that? So will it help if I learn about the last month to get the profit after this month? Yeah.
All right. What we are doing is we are looking for price patterns. Now, of course, we cannot predict what will happen in the future, but what we are doing is we are looking for trades that are higher probability. Let me give you an example using a chart, okay? For example, this is one that I've been looking at very carefully, Ashok Leyland, okay? Here's one right here. Now, if you look at, you see, there's 2 lines that I have added here. Let me remove these extra lines to make it clearer. I can always add them later. Yeah. Nothing else? All right. Yeah. So you see this blue line and the red line. See, the blue line is the average price for the last 20 days. You see? See, what you have up here, let me make it bigger so make it easier for you to see. Yeah. See, what you have up here, these are the prices from each day. All right. It's a 1-day candle. See the D that is highlighted there. So it's a 1-day candle. So each price, each candle represents 1 day of price. All right. So what we're doing is we are using an average of the last 20 days and the average of the last 60 days. Okay. This is what we call moving averages. So please watch that video on moving averages. So what we are saying is when the last 20 days moving average is higher than the 60-day moving average, then the price, the price of the stock is on an uptrend. But when this 20-day moving average goes below that 60-day moving average, look what's happened by that time. See, the price has gone down. See, the price has gone down. And then when the 20-day moving average goes above, it's on an uptrend. Although it's on an uptrend, some of this may be confusing. Let's say that you bought it up here at this point. Look what happens. Next day, the price went down a little further. Next day, a little further, and further down, down, down. Again, it went down. But then it came back up again. So as long as the 20-day moving average stays above the 60-day moving average, the probability, that's the word I will use, okay, not predict, but a probability is for the price to continue going up higher. Now, I'm watching Ashok Leyland, but look what's happening here. At this point, the price is going down. The 20-day moving average is going below the 60-day moving average. So this is something I don't want to enter. I was watching it carefully, trying to see if it was going to break out and go further up. No. So I decided not to. Okay. But look at the history. So you asked about the last 1 month. This goes much beyond 1 month. You can have years of history for these stocks. But look at all that history. What happens is whenever the 20-day moving average is higher than the 60-day moving average, the price is generally going up. But when the 20-day moving average is lower, see, the price is going down. Okay, so that's only one of the indicators that we are using. Okay, so yes, by looking at the prices from the previous weeks and months, definitely will help us to see the probability of the price going up in the future or the price going down in the future. It will help us to see. And there are also some patterns of the price movements. The price movement, there are certain patterns and there are certain levels of prices that we will learn about. Okay, those are also there in my video. Okay, but either way, as soon as you open your account, I want you to look for something called a quick start guide. It's in the learn to trade file. Okay, it is called a quick start guide. I'll put the name in this chat box. Okay, other questions? Okay. Sabida, how are you? Sabida has been trading for a few months now. And she's diligently learning. And we have, actually, we have more than 50 people in our group. I think about 55 people that continue to learn.
Yep. Sorry, Pastor, I didn't hear you fully.
Well, I was just asking how you're doing with your trading.
It's been a great, interesting, and oftentimes frustrating experience.
Okay.
But it is interesting. And there are days that I feel I just can't do anything right, any stock that I select and it bombs.
Yeah.
But of course, there are days that they do well. So
Yeah.
I can't say that. I think definitely need to learn more, especially concerning stock selection. Because
Okay.
I'm not using all the indicators like you've taught, although I've gone through them, I haven't not putting it to practice. I only see the moving averages.
Yeah.
That's the only one that I see. So I believe I must learn the others also.
Yeah. Now you can use just the moving average if you want, but then you would have to hold on longer. You might have to put a stop loss of maybe up to 5% and then just hold it much longer, like a month or two.
Somebody asked a question about stop loss, right? That was one of my big challenges.
Yes.
It took me, I think, 1 month to figure it out how much of a stop loss to keep, because if it was too small, in the small variations, the stock would just get sold off.
Yeah.
And I'm sitting on one one stock right now where I kept the stop loss really low, stop loss, and now it's really gone down. So I'm like, I wish I had kept it higher.
Yeah. What was the percentage that you had put?
I don't remember. I bought the stock for 600 something and I kept the stop loss at 400.
Oh,
So
wow.
really low.
Yeah, that's like uh yeah, that's like what is it, about 30% or something. That's
Yeah.
huge.
So,
Yeah,
so
that's
that
huge.
was also quite foolish. So
Yeah, for me, I would only put like if I put a wider stop loss, it would be like 5% or 10%, depending on the chart. So here's something you can try, Sabida, by opening up the chart. I hope you can see my screen. By opening up the chart, I'll show you some that are like yeah. I'm just going to show you something that Federal Bank has not been doing well, as you can see.
mm,
Um, yeah, this is a weird one. I don't want to. I entered into this, by the way, uh, and because I saw this bullish candle while it was going up, and I took a chance at it, and it has gone up now. And I don't know if it will break out of this triangle pattern. I will see if what happens here. But I'm watching it very closely. And in case if it goes down, I'll sell and get out of it quick. Okay. So some of these situations, like here it is. If you're entering right here, what you can do is you can look at the recent lows, okay, which are right over here, and you can enter just below that. Okay. But then here's a weird situation where it's gone down. This very rarely happens like that, but it does. But it does happen. Okay. And last week has been a very difficult week, and that's why you're seeing this downtrend. But that's okay.
yes.
They will come back up. Last week has been difficult. See, every single stock on my watch list has been doing terribly, except the technology stocks. This week just happened to be doing well. See
Okay.
that I entered this as it was moving. It broke out of this range, and then it went down. This is called a retest, but then it went up again. Normally, it retests on this line, but it still went up again. So you can also look at the daily charts and the weekly chart as well. See the same thing on a weekly chart. Look at that. And each candle is 1 week of prices. When you go to the
First, I
daily
wanted to
chart,
ask you.
each one will be a daily, one chart for a day. Okay. Yes, Sabida.
So I haven't joined TradingView yet.
Okay.
I just use these Zerodha charts, but I
That's good
see
enough.
that nearly everyone else uses TradingView.
Yeah, you don't have to use TradingView, but the only benefit that I find with TradingView is that it gives you a little bit more flexibility by allowing you to have different types of. I'll show you different types of indicators and different things, so you can have different lists. So since I also trade in the U.S. markets, I can add more lists, and also I can put different colors to indicate. Okay, I can put
Mm,
different colors like by clicking here. So I can have all kinds of different colors, and each color could mean a particular thing for me,
okay.
like that. Yeah. So there are some benefits like that,
But
and so basically, Zerodha also gives you this exact trading view chart. It's part of it. Okay, you're
yeah,
actually
that's what I
using
wanted to ask you. Is it connected to Zerodha?
it is no the other way. Yes, TradingView is connected to Zerodha. Yes,
Okay.
or Zerodha is connected to TradingView. So Zerodha is not coming up with their own charts. They're just
Okay.
using TradingView's charts. I'm sure they pay them some money for the usage, and that's it. Yeah.
So you said the first 1 month is free, and then after that, how much is it?
Well, see, there's a free version. Okay,
Okay.
and so with the free version, you don't have all the different colors. You only have like one color. I think you get just a red, and then you
Okay.
cannot create different uh, watch lists. You can only have one watch list, and you can have all different colors that you want. That's the only limitation. Everything else is the same, pretty much. And all the drawing and all of that you can do as well. You can do all the drawing too. So you don't have to take the paid version. The paid version is like, I think monthly, it might be, I think about 1,000 or something like that a month. I'm not sure exactly. Yeah. Okay. So you can use the free version, and it will give you plenty of usage.
Yes, sir. I went to the trading view, but I don't get the link which you are having. But I have a very few lists. So how to generate that one? Is there any other filter or kind of thing in the trading view?
To do what?
I just went to the trading view which you are showing. I can see only a couple of entries there, like Nifty and Bank Nifty or Sensex. That only couple of things. So is it like we need to filter something, or is there any other view list or something?
Okay. What you do is you have to add to the watch list. And in my file, Learn to Trade, which is there in the chat box, that file, I've given a suggested watch list, okay, of stocks that are below 200 rupees each. So you add the different stocks to that list. Okay?
Okay, sir. Yeah.
Binoy, have you opened the Zerodha account yet?
Yes, sir. I have opened maybe 2-3 months back.
Good.
And yeah, in your first class. So, but I couldn't follow up with opening another. Binny was talking about some other WhatsApp and some other account. I forgot that one.
Okay.
So I couldn't follow.
All right. So yeah. So what you want to do, and Gerald is also asking that same question. So in that file, I have a let me put that in here for you just to show you. All right. I have something called a quick start guide. And you can copy this out, but even if you don't copy it, I mean, it's still there in the it's still there in that same file. I just copying it out of that file. Oh my, no, that's not what I wanted to do. Yeah, let me see. I didn't copy it properly. 1 minute. Yeah, here it is. Here it is, okay? All right. I gave several ideas there. Number one, create a watch list. And I've given suggested watch list there. Then number two, set up your trading software for moving averages. See, that is one way that you figure out if the stock is trending up or if the trend is down. If the trend is up, okay, that is one of the stocks that you want to watch out for. Number two, set up your trading software for moving averages. Okay, that's the other thing that I shared, moving averages. No, I'm sorry. Number three, learn to use triangle patterns. Okay, here's another item that I've given. So like that, there are several different indicators that helps us to learn which stocks are moving up. All right. Good. Well, thank you for joining me today, and I hope this was helpful. And keep in mind that what you're doing is you're looking for higher probability trades. And if you enter into 10 trades and you were correct on 6 out of 10, then you're profitable. Okay? How come? Because what you're doing is whatever your stop loss is, your target is at least twice as much. Okay, so that way you still end up coming out profitably. And now this month, my profitability is a bit low. Like I said, it's a very difficult month, but still, I think I've already gained about 3% on my total capital, by the way. On my total capital, I've already gained 3%. Now, on individual trades, some I've made 7%, 5%, 3%, like that. But overall, on my entire capital, I've already made 3%. Okay, so that means if I have 1 lakh in there, I made 3,000. If I have 2 lakhs in there, I have made 6,000, like that. Last month, it was about 6.5%. I don't know how far I'll be able to go this month. We'll see. The month ends on, what is it, Tuesday or Wednesday? And so we only have a few more days of trading. And so we'll see what happens. Okay, thank you. I hope it was beneficial to you. And God bless you. And Gerald and Binoy, my number is there. My number is there in that file, Learn to Trade. Okay, my number is there. You can send me a message on Signal or WhatsApp. I prefer to use Signal. I'm slowly switching away from WhatsApp. So you can, feel free to send me a message, and we can talk. All right. Thank you.
Thank you, sir.
Okay, Pastor. Bye-bye. Thank you.
Bye.
Thank you.